Good morning, everybody. Christopher from Serene Education with my analysis this morning for the 23rd of January. So Wednesday, the 23rd of January, 2019. Hi, folks. Okay, nice fresh morning. Easy -4 out there, but clear. And yeah, nice cup of coffee. Let's sit down and have a look at the matrix to see what's been taking place and what's expected on the economic front today. So we are Wednesday, midweek. And what happened last night? Last night we had the Bank of Japan's outlook report. We had its monetary policy statement. We also had the Bank of Japan's press conference. And what do we have? The All Industries Activity month-on-month figure. And the outlook over here was, if I'm not mistaken, let's have a look over here. It left its interest rates, asset purchases, and forward guidance policy unchanged overnight. Okay, but what it's done is it's cut its core CPI forecast from 1.4 to 0.9. So there again, another idea that we're going through a global contraction, and the inflation report is obviously everybody seems to be contracting. There's their outlook, clear sign that there's not a lot of bang for buck out there in terms of movement. So another sign, if we look at the yen crosses, do we see that taking place across the board? We saw some movement for some of the crosses against the yen in overnight trading, but some of them are, this is oil and gas, apologies, so that's not really part of it. So none of them are all that willing to budge. Australian New Zealand dollar looked fantastic over here straight off the bat, so have a look at the Australian New Zealand dollar. In fact, let's have a look at that quickly while we're here. Let's see if I can find it. Where are you, Australia, New Zealand? There we go. Okay, you can see this one over here is very volatile. Okay, it has been for a long period of time. Very, very volatile in its outlook. If you look at the bodies, you can see that we had a slow growth process through 2015, 2016, 2017, and 2018. However, as we got closer and closer to the end of 2018, we started to see that sell-off yet again. So we have this wedge formation taking place. Very, very pronounced wedge over the years. That's been in play for, well, as I said to you, probably 4 or 5 years now, going to our 5th year. Okay, on the hard right edge, you can see we've had a breakout to the downside. And if I just draw a line over here just to represent that, so you can see a support mechanism through 2018. We had a breakout here as we head into December, and that took us down towards the lows that we saw in 2017. And it's heading down towards those all-important lows. So around this area, you start to see a lot more hesitation taking place because these areas are quite close to each other. So, and what we've seen so far is you've seen this very volatile month of January. We're looking in excess of 440 odd pips, but you can clearly see that we haven't seen that continued drive low. We've seen the initial drive low, but we haven't been able to remain below the December candle close low to emphasize that we have true continued selling. And it's predominantly a reason that we have this constellation over here is, I would presume that we have a lot of investors out there who are worried about the current support mechanism that we have on our lower time frames. It's quite close. So there again, remember this is an Australian-New Zealand cross. So here again, you're looking at a tie between both parties. There tends to be more than most times a knee-jerk reaction that takes place in this particular pair. So if I apply the Forex Managed temper to this, you can see that we are still trading below both moving averages, which is an important reflection of negativity. The RSI is below the midpoint, and the MACD is still in favor. So here, if we're looking for continuations of the selling center we've seen through the September, October, November, December period, we need to be trading below than the December body to then target the December low, which effectively we have done quite convincingly. It's just that we haven't been able to hang on to those levels once we've got to that level. Drop down to the weekly, you can see we've had a sharp pullback, a very strong hammer. And then we've had a retracement due to that because we've had almost 5 weeks here where we've not seen a low. So essentially what we saw is a slight retracement back to the upside. However, we are governed by this downtrend. 2 moving averages are still above price. RSI is still below the midpoint. Yes, as we've gone sideways, we saw convergence, which indicated that there was no selling pressure. And then the MACD is obviously indicating negativity, but a weakness in that negativity because the histograms are plotting back towards the midpoint. Now what we have is we have a sharp sell-off on the weekly. So this week so far we've had a sharp sell-off. It's engulfing the current 2-week process. But what we needed to do essentially is to punch low and close low than the current 5 or 6 week low. Okay, we saw that 3 weeks ago. nice punch low, but it failed to maintain those levels, and that's the importance in this part of here. So here, rather bide your time, rather instead of trying to chase trades, rather wait for a defining breakout, because if we do get a defining breakout lower than this particular point, it'll emphasize that then we clearly don't see this long-term support and resistance level as a viable support mechanism anymore, and then we could see continued negative rallies to the downside with a lot more assertiveness, because you can clearly see now we're trading back into a very messy prior hesitation or support mechanism we saw over 2016 and 2017 in particular. So we need to be very wary of that. Other than that, I'm going to spend more time looking at the four majors over here in particular. So I'm just going to open up the euro against US dollar really quickly. There we go. So naked chart, this particular pair, we can clearly see that price has been falling on the monthly time frame over a number of years. We've actually been channel surfing since 2008. So sell off in 2008, the correction that we saw through 2009, and then yeah, it's pretty much just been moving sideways. And then through a period we actually saw a very strong support mechanism being forged, which is actually when I apply the Forex template, that's the 200 period moving average. That's where the 200 period moving average came into play and actually supported price on multiple time frames through this period, that period, and came through here essentially. You can see what we have over here is we have price sitting on a consolidation, then we had the breakout pullback, and then the continuation up towards this resistance level high, and then we've seen the fall. But you can see the hesitation now on the hard right edge is taking place at the previous resistance through 15 and 2016. Get below all of that, then we have this 2016 low point as a viable target level. But we have to see a stronger candlestick of intentional continuation of selling. We've seen it here, seen it there, seen it there, seen it there. At the moment now, we're sitting above all this. And if I just clean the chart up a bit more, you can see that if I apply support and resistance level, you can see that price is currently circumnavigated below. So we had a resistance there, we had a support there, and then we had a resistance over here. Sorry, support through there. Now she's punched low, she's pulled back. She fails to gather any strength and she starts to drive low. We could essentially see a continuation taking place down towards these levels here. But here again, we need to see a statement of intent on this hard right edge here. So if I just pan in now, there we go. You can see we had indecision candle followed by decision. So it's a weak morning star. We need to see price trading above the November candle high and to continue to hold that level to then reflect more of a move to the upside. Failure to close above the November high will then construe this as just a profit-taking aspect after the breakup we saw in October, and then we should be looking for continued selling to come to drive low. Okay, so here again what we need to look at is something to shape a more defining picture, because at the moment now we have a consolidation over the last couple months, which is not a good sign in terms of opportunity. So if I apply the Forex Made Easy template to this, just pan out. Now you can see the bigger picture. There's that support and resistance mechanism I told you over the years. There's the low for that particular year for 2015, 2016, and the start of 2017. You can see we've actually moved low now into this area. We've seen a break low, another pullback. Now you can see that the 50 period moving average is that support mechanism. The August low is also a level that we have not been able to get below over a number of months. So here again, keep that in mind. We need to be outside of this range to then target these lows that we saw through the latter part of 2016 and the start of 2017. There's an excess of 800 odd pips there in terms of profit, but we need to see that price closing low. Otherwise, what we need to see is price, if we see this as a strong morning star, or it's a weak morning star for now, but a stronger morning star, i.e. reversal, price needs to remain above the November high for the foreseeable future. If we get a nice bull engulfing candle here above that level, it will then reinforce that we're likely to see a greater retracement, and then we can start looking at the previous swings. But all the way up towards, the potential is to look all the way up towards that all-important 2018 high, which is back to the 200 period moving average. If we look at the indicators over here, you can see the 200 is still above price. The 50 is being supported currently by price. RSI is below the midpoint. MACD, fast line below the slow line, histograms below the midpoint. The only thing over here that we don't have is that momentum. The histograms have got weaker, but there again we haven't seen a new low. So it's doing exactly what price is doing in the chart. But that should be a warning sign, because we don't have continued selling, therefore there's weakness in that selling, therefore we need to stand aside and wait patiently for a continuation of that momentum, that increase in selling sentiment that we've seen throughout 2018. Because if we don't get it, the likelihood is we could see price then retracing to the upside. Because if there's no more sellers, then clearly people are going to start to buy. If nobody's buying, nobody's selling, we should end up seeing more indecision candles, spinning tops, dojis along this area, which will then effectively tell us don't trade because we don't have the momentum. Down to the weekly, there we go. You can clearly see price is still stuck within this horrible range, has been for a number of weeks. I think it's 9 weeks in total. It's all happening on the 200 period moving average, so we have a support mechanism in play currently. The problem over here is price is still stuck below the 50 but above the 200. The RSI is below the midpoints. MACD is fast, but slow. Weakness in that fast. So we have a lot of mixed signals. We have two negatives and 2 positives, which is, yeah, a mixed signal. So not great. They're again emphasizing why we need to be more patient, wait for a more defining candle. Okay, we've had a lot of opportunities on the weekly where we've had past punching lower than the 200, but failing to close below that level by the end of Friday. Again here, 2 weeks ago, we had price moving higher than the previous November high, but failing to hold on to those levels and falling back down within that. So a lot of fake outs here. A lot of people would have, newbies would have actually been caught in these positions thinking, price is really moving now with a lot of gutso. And guess what? No, didn't really confirm a breakout, therefore we did not have a confirmed continuation, therefore no opportunity to trade. So here again, the reason why we have to be more vigilant, more patient, and just wait for a defining candle continuation before we take the next step. Very, very, very important. Okay, so this week we're looking to continue. There's only 3 days left this week. Look to see how things pan out this week so far. What do we have today? We have consumer confidence stats for the European Union. It was -6 before. They're expecting -6 or no change. There again, it's below 0, which is contractional. It's not expansion, which is not a good sign. There again, please look to see how things pan out. There again, look at the US dollar. This is your euro-dollar cross. So look at the US data to see if any of the US data will then appease any opportunities for this particular pair. But I do recommend that at this stage, we haven't had a clear picture over the last 9 weeks. Why would you want to bother looking to trade intraday if you haven't got anybody viably on this moving price in any one direction? So I'd rather sit on the fence, be patient, and wait for a defining candle breakout.